My name is Will Barton, and I am the lead analyst at High Dividend Opportunities, the #1 income investing group on Seeking Alpha. Thank you for watching our Income Method Picks series, where we take a look at investments we have recommended to our community of income investors. Today's pick is a bit different. We're taking a closer look at Strategy Inc., ticker MSTR, and more specifically, its preferred shares like STRC. These securities are currently offering high yields, but the structure behind that income deserves a closer look. At its core, MSTR is no longer really a software company. It's a Bitcoin treasury. The company holds tens of billions of dollars in Bitcoin, while its operating business generates under $500 million in annual revenue. That's an important disconnect, because when you look at the preferred shares, the income they promise isn't coming from operating cash flow. It's coming from somewhere else. In fact, MSTR's operating business doesn't cover even a fraction of its dividend obligations. So how are those dividends being paid? There are only three options: use cash on hand, issue more equity, or sell Bitcoin. And in practice, it's a combination of all three. That creates a cycle. To fund dividends, the company raises capital or sells assets. If Bitcoin prices fall, more Bitcoin has to be sold to maintain those same payouts. Over time, that reduces the asset base supporting the entire structure. That's where the risk begins to compound, because for preferred shareholders, everything ultimately depends on Bitcoin going up. Now, one of the most widely issued securities here is STRC. It has a variable dividend policy designed to keep the price near $100. If the price drops, the dividend may increase to attract buyers. But that's not a guarantee. It's simply management's current intention, and it can change at any time. That flexibility benefits the issuer, not necessarily the investor. And this leads to the core issue. As a preferred holder, you're taking on the downside risk of Bitcoin, but you're not getting the full upside if Bitcoin rallies. That upside largely accrues to common shareholders, so the risk-reward becomes asymmetrical. If Bitcoin rises steadily, the system works. If it stalls or declines, the pressure builds quickly. More issuance, more dilution, more asset sales, and eventually that can impact both price and income. At the end of the day, this is a structure that depends on favorable conditions continuing. It's not supported by recurring operating cash flow. And that's a key distinction from the types of preferred equities we typically look for. For income investors, the goal is durable, repeatable cash flow, not income that depends on asset liquidation or constant capital raising. If you want exposure to Bitcoin, there are more direct ways to do it. But when it comes to preferred income, structure matters. And in this case, it's worth understanding exactly what is supporting that yield and how caution is worth consideration here. For more details on this ticker and other ideas like it, consider subscribing to High Dividend Opportunities, the #1 investing group on Seeking Alpha.